counted. We are going to be talking about all the hidden treasures you have in your home. There is one in particular, a hidden treasure that you may not think about. Whether you are in your 40s or you are in your 70s and 80s, this video that we're putting together about hidden treasure is going to be of interest to you. What do I mean by hidden treasure? Well, if you've been living in your home for a long time and you have been paying every month your mortgage, that home has increased in its equity. Or you might have paid your home off. And if you've paid your home off, oh my gosh, you have all that money just hidden inside those walls of your house. So today we're going to explore opening up your treasure chest and thinking about that treasure that you have, that equity, that money that you have in your home. And we're going to be talking to Cheryl Foley, who is from Guild Mortgage, and we're going to look at a reverse mortgage. I'm CJ Jenkins from Century 21 Cornerstone. I thank you so much for joining us today. Let's hear what Cheryl has to tell us about reverse mortgages.
Well, reverse mortgages are an amazing product to unlock the treasure that you say that you have in your home. We all are building equity. The reason we buy our homes is because it's the greatest way to build wealth.
True.
And it's great to build wealth, but when we get a little older and we need our wealth, it's nice to be able to tap into some of that reserve that we have paid into and grown over the years. Everyone's living longer.
Yes.
Everything is costing more and more, and life circumstances change as we get a little older. I'm older, 78.
She just told me she's 78. Can you believe that?
So as we get a little older, a lot of times something has changed. Maybe we've lost a spouse. And with the loss of that spouse, maybe we've lost half of our income. So I had a client this week that I met with, and she always said, I lived the good life. When she was married, she lived the good life. And then her husband passed away, and she moved back to California, and she no longer feels as if she could live the good life. She couldn't go out with the girlfriends. She couldn't go to that monthly concert. She couldn't travel or take go with friends to Disneyland or whatever it was she wanted to do. She was just restricted because the cost of maintaining the home was greater and the cost of just living keeps increasing. And our income doesn't always go up with the cost of what it is to maintain our households. So we were able to take equity from her home, give her an additional $1,000 in income every month, pay off her mortgage, which meant then she had another $700 that she was paying.
So her mortgage was $700.
That was just the principal and interest, and she didn't owe very much on her home at all toward the end, under $50,000 actually. So she had a tremendous amount of equity in her home. She had wealth in that home,
and she doesn't have to move.
She doesn't have to move. She gets to stay in her home. She gets a monthly $1,000 distribution that is lifetime. It never stops.
So if she lives over 100?
If she lives to be 200, she's going to get $1,000 a month for the entire time that she's living in the house. You do have to maintain residency. You can't be gone more than a year out of your home.
That's a good fact.
Right. But she also, not only does she get the monthly income, but she needed a little cash at the close, so she's able to take a lump sum when she closes escrow, and then she still has a pot of money that's sitting there as a home equity kind of line of credit that continues to build at the same rate that she's paying, so that it's growing all the time as you need that to grow.
So the lump sum, let's say she's been in the home and she's been there for 30 years and her roof needs to be replaced. That could be that lump sum?
That could be that lump sum.
Okay.
Because just depending on, how much value is in your home, it determines how much you can take. But like we went from, at first she thought maybe $800 would be what she wanted to take, and then she decided really to do the things she wanted to make it $1,000. So that makes the lump sum a little bit less that's left there because there's only so much equity, but that equity continues to build. And that's really the nice thing about reverse mortgages is that home home equity line of credit is building and growing. The equity in your home continues to grow. So even though you're adding to your principal balance every month, because there is a payment, whether you're making the payment or not, there is a payment. You're borrowing money. And what they do is they add that payment onto your principal balance every month. So say that your principal and interest would be, like hers was, $700 a month. $700 is getting added to your principal every month, but your house is appreciating during that same time.
Even if it's a small amount, it's still appreciating, and much more than it would in the bank.
Absolutely.
Yes.
Even in
Yes.
today's rates.
Yes.
So it was a lifesaver for her. She was so happy to know that she could get the cash she needed right up front, that she could have the increased monthly income, and that she could have the money there so that she didn't have to go to family to to pay for these
That's
incidentals.
so hard. It's so hard for an older person to ask their younger folks for money,
Right.
To help ends meet. And usually a lot of older citizens then don't ask, and then they do without.
Exactly.
And
that's
here
what
they
she
are
was
in
doing.
this beautiful home, and they can't afford to go to Panera for lunch.
Right. Or go grocery shopping with today's
Right.
grocery bills.
Right.
So it really is a wonderful vehicle for them to be able to utilize the equity in their home. It is an FHA insured loan, the Federal Housing Administration. So just like if you were doing a forward loan, so there's forward and reverse. So regular forward loan is where you're making your payment every month. If you were doing an FHA loan, you would have mortgage insurance with that, and it's a government insured
And it's
loan.
guaranteed.
It's guaranteed.
So the value of your house is guaranteed.
What's guaranteed is that you're never going to have to pay a gap. So
Okay.
if I live in my house until I'm 110, and maybe my house isn't worth as much as my mortgage is, if my family inherits that home, they're not responsible for the difference between what the value of my home is currently and what I owe on that loan.
okay.
FHA insures that gap for you. And you always own your home. It's always in your name or in your trust, however you have it set up, so that, again, you're protected. And people talk about, well, reverse mortgages are expensive. Well, reverse mortgages are a little expensive.
There's a cost of doing
There's
business.
a cost to everything. But for you to be able to stay in your home,
That's a big thing
is
for
huge.
a lot of people.
It is. For most people, it's really important that they can maintain their dignity and their independence by living in
Right.
their own home. So this is a way to help pay for a caregiver if you need someone to come
Yes.
in to be in
Yes.
the home as well as just the basic necessities and the little.
And what if you get your driver's license taken away? You need to be able to pay for somebody to drive you somewhere.
Right.
Lots of our families don't live close to their parents now, just in the way that work has changed everything, and lots of things have changed since COVID too.
Absolutely.
And so let's say you need an Uber driver to take you from your home to do shopping
Or a doctor's appointment,
Or doctor's
you know,
appointment. So you
because-
would have that as a luxury in that regard.
Right.
And not have to ask on friends.
Right, to not have to ask your friends, not have to ask your family, not have to ask them to cover the shortfall that you're meeting every
Right.
month, which makes you feel badly because you think, gosh, I planned, I saved, I did all the right things, and yet here I am at the golden years. And
At a deficit.
At a deficit. I can't
Yes,
meet the
yes.
basic necessities.
My Auntie Sadie, I was in charge of her in her last so many years, and I was on all of her bank accounts, so I knew how much money she had in her checking. One month she had $1,000 in her checking, and that's what she had as extra. And she called me and she said, should I pay my car insurance, or should I pay what I owe on actually she owed for a battery for her car also. And she had to decide which one she should pay for. And she had all this money invested in her home.
Right.
Her home was paid off, and she could have used someone to help her stay in the home, and she could have had that money to pay for an Uber driver to take her to speech therapy. She had a little stroke she didn't tell us about, And when it came time for speech therapy, she just didn't go.
Right, and that's what so many people that are more seasoned, as I will say, is that they do without something that's really essential. Maybe they do without their prescription medications because they're expensive and they become more expensive. People shouldn't have to do without when they're sitting on this treasure that's sitting in their house. They'll say, I've heard people say, well, but I want to leave it for the kids. Well, you know, if the kids can help you now, that's fine. If they have the ability to, like for this particular woman, to free up $1,700 a month that she really wanted and needed, if she could turn to a family member and say, could you give me that every month? That would be an option.
But it's not done.
It's not done, and it removes the woman's dignity and independence because now I have to rely on you to meet my basic necessities.
Right.
Much nicer for me to be able to provide for myself. And so maybe there's a little less when eventually she has to move out of the home for the heirs, but as we know real estate always appreciates, generally there is still money left in that home. That value is greater. I had a client call this last week. His mother had passed away a year ago. A house up in the foothills here. The house was worth about $550. He owned $265 on it. Now he waited till the very last minute to refinance it. So I would suggest you not do that. You have a 6-month window generally after the time that someone has to move out of the home to refinance, or up to
I
a
didn't know
year.
that. That's good
So
to know.
there's some parameters there. But the house was worth $550. If he let that house go to foreclosure, he was going to lose over $200,000 worth of equity.
Wow.
All he had to do was refinance the home, and then he could sell it when he was ready to sell it. He could come to you to sell it for him.
Okay,
and
sounds good.
and he would have maintained that value that was in the home as well. So his mom passed away. She still was able to leave him a legacy, but she also was able to live with dignity while she was still in her home.
Right, right. This is such an important concept to think about. And instead of just being in this little box here of, oh, I don't have enough money in my checking account to pay my bills, but that I actually do have money within my home. Now, I have a question for you. How old do you need to be how old can you be to get a reverse mortgage?
62 is the
62.
minimum age is 62. But another really wonderful aspect of a reverse mortgage is a reverse purchase. So a lot of people, as they season up a little bit, want to downsize. And so
they can use a reverse mortgage?
They can use a reverse mortgage for
Wow.
purchase. So you have a
That's
home
great.
that has a lot of equity in it. You're going to sell that home and you think, well, I'll transfer and I'll put that money down on another house and do a forward mortgage. Well, then you're going to have to make principal and interest payments every month. You can also take the money out of that house, put it as a lump sum down, usually between 40 and 60%, depending on age, and have no mortgage payment at all.
Wow.
Only pay your taxes and insurance. Those are always your obligation, but you're paying those anyway.
So if you needed a senior-friendly home, a single story, for example, without 15 steps up to
And 5
carrying
acres.
carrying your groceries up
Yeah.
15 steps, that could be something that you could be doing. And so you'd be using a reverse mortgage in a different way.
Right. It's just a reverse for purchase. And it's a wonderful tool for people to be able to downsize and have the money to travel. Make that trip to Europe you want to make. Take the cruise you want to take.
Or go see your sister in Idaho. Or
Right.
visit
Take the
family
grandkids.
members.
Take
Yes.
the grandkids to Florida,
Yes,
to Disney
yes.
World or
Now,
something.
also, Cheryl was telling me that in order to get accepted for a reverse mortgage, you also have to have an intermediary, and that is a counselor. So explain what a counselor does.
So when you talk with someone like me about a reverse mortgage, the first thing we're going to do is refer you to some HUD counselors. So those are FHA approved. HUD is Housing Urban Development, but they are specialists in reverse mortgages. And their job is to look at the proposal that a loan officer has given you.
So they're checking you,
There's
in
a
a
code.
sense.
There's a code when you give a quote. They go in and look at exactly what was presented to you, and then they can go through and answer any questions that you have about a reverse mortgage. So I'll give you a whole sheet of questions and say these are maybe some things that you certainly want to touch on when you're doing this counseling, but it's normally a 45-minute to an hour session. We always suggest that you have someone else there with you.
Oh, that's a good idea.
That's
So
like
they'll
a-
remember some of the things that they're told.
Right, and maybe it's a financial advisor that you have with
Or a family
you, or
member.
a family member, but you should have someone with you. And I always encourage someone that's coming in to talk with me to also bring a family member, or we'll sit
That's
down
very good.
with the financial
So
advisor.
the counselor, in a sense, is a protection,
It's an independent third party that has no gain.
vested interest.
There's no vested interest in whether you do this mortgage or not. All they're trying to determine is this a good product for you? Is
Right.
this something that
And-
will benefit
and
you?
also, they probably are checking to see if the person who's making the decision is capable of making the
Yes.
decision at a particular age.
Right, right. They do need to do that because we want to make certain. I mean, if someone doesn't have the capacity to make that kind of a decision, then we wouldn't want to put them into
Right,
into this kind of a
right,
product.
right.
But so I always suggest that you have a counselor with you of some sort. But the HUD counseling, we have some that are free. So as soon as I meet with people, I strongly suggest that they go ahead and do the HUD counseling first. There's no obligation. They don't have to go through with the reverse mortgage. It's strictly educational.
Very good. Very good. Well, this has been so enlightening, and it gives me some great tools to work with. I'm a senior real estate specialist, and I do have a lot of people in my community that are living in big houses, and there's one person living in it, and they have a list of all the repairs they feel that they need to do. And either they need to downsize or
they wanna stay.
or want to stay and fix their house up. So I have some information for you. This brochure here and Cheryl's contact information. Home buying is one of them if you're using a reverse mortgage, or if you're thinking of a reverse mortgage to stay in your home. Please give me a call. I'm CJ Jenkins at 530-906-4715, and I'll be happy to pass on Cheryl's information to you. Thank you so much for joining us. Thank you, Cheryl.
Thank you. It was a pleasure.
Bye-bye.
Bye.